As stated in one of our other cryptocurrency video blogs, the taxation treatment of crypto depends on your activity rather than the fact you're dealing in crypto per se. It's the nature of that activity that will determine whether an individual owning crypto will be subject to capital gains tax or income tax. Of course, if you're operating through a company, then you'll be subject to corporation tax regardless of whether it's of an income or a capital nature. As stated, there are no special rules for cryptocurrency. As such, HMRC will apply existing tax rules in determining the taxation of that activity. So one point to note is that HMRC have confirmed they will treat gains as foreign currency exchange gains and losses in the same fashion. So for this video, let's concentrate on individuals who are holding cryptocurrency. And there are essentially three capital gains tax chutes that a holder of crypto might slide down. The first is where he holds it for personal use and expenditure. And in principle, it seems under HMRC's 2014 paper that where crypto is acquired for personal use, its disposal could ultimately be free of tax. However, whether a particular case falls within this exemption will be fact sensitive. Care should be taken as this is a developing area of tax. As such, one should note that HMRC could well have a different interpretation in what remains an area of law in its infancy. As such, any filing position should also be accompanied with a full disclosure of the circumstances. Secondly, where the holding was acquired speculatively, HMRC guidance does raise the possibility that these transactions could be so speculative they are not taxable. Again, the specific facts and circumstances will need to support one's position, if one takes that position, as it's wholly plausible that HMRC may challenge it. As such, to avoid any penalties being imposed, it's important that full disclosure is made on your tax return. Thirdly, the holding may be acquired as an investment with the profits being subject to capital gains tax. In many ways, this is the default position where no special treatment applies. So, for example, it will apply where there's no justification that it is a speculative or personal use holding, but at the other end of the spectrum, the activities are not so organised to be classed as a venture in the nature of trade. If you fall down this particular chute, the gains will be subject to capital gains tax at either 10% or 20% depending on the level of other income that you have in the tax year. You should generally also be entitled to the annual exemption, which currently is around £11,500. Companies will be subject to corporation tax at 19%. In terms of timing, gains or losses will arise in a number of different circumstances. Clearly, where one converts cryptocurrency into fiat currency, so for example, turning your Bitcoin into sterling or dollars, that will be a disposal. However, it will also be disposal if one converts one type of cryptocurrency into another, i.e. one changes Bitcoin into Ethereum. Finally, the other relevant time might be where someone participates in an initial coin offering or ICO. If you've incurred a loss on cryptocurrency, then in theory, these losses should be available against other gains in the year or to be carried forward indefinitely. And this is perhaps why HMRC has stated that there are transactions that are so speculative as not to be subject to tax. Because the flip side is being that they will deny losses on such transactions as well. This allows HMRC to achieve a balance between raising tax from the profits but not committing themselves to allowing large loss claims if, say, the cryptocurrency bubble suddenly bursts.